I'm Dave Price, and this is the American Farmland Owner Podcast, our weekly conversation with top leaders about farmland ownership and investing. This week's guest is Steve Bruere. Steve followed his father and grandfather into farming in Iowa, and these days he also follows the global trends that affect the Bruere family farm, others like it, and the investors who are increasingly attracted to the industry. He's the president of People's Company, a full-service agricultural land transaction firm. The company just partnered with the University of Illinois at Urbana-Champaign agricultural and consumer economics instructor Ailie Elmore. That's a mouthful. They released a white paper called The Evolution of Farmland as an Institutional Asset. Now, we're going to get into that in a bit. But first, Steve explains why a trip to an annual conference seemed a bit different this year. However, we must first explain why there's no video version of our conversation. All right, let's first set the scene here. Each week, we do this video conversation. Steve, we don't see you. Why is that?
You know, Dave, I'm sorry to break the trend, but I've found that my messages are much more prolific when you don't have to look at me deliver them. So yeah, I appreciate you bearing with me.
Always the humble farm boy. Hey, you've been traveling all over the place. You're out in New York for a conference. What'd you learn?
Yeah, I was at a conference we've been attending, 15, 16 years now, called the Global Ag Investment Conference. And it's an interesting event where they bring together a lot of the major asset managers and capital sources that are putting money into farmland. And so it's always interesting to kind of see what the fundraising messages are, what themes people are raising capital around, and what the mood in the room is around fundraising. And this year was particularly interesting, just with what's happening with ESG and wind and solar and carbon, and then the higher interest rate environment and the lower commodity price environment. And I'd say the morale in the room was a little off this year from what I've seen in the past, and people are still bullish on the asset class, and they like farmland, but raising capital in an environment where there's a lot of fixed income products where you can get 5% plus returns in the bank. It's a little more challenging for that group.
Interest rates haven't budged, and it sounds like they may not, maybe until later this year than what some folks had hoped for earlier here. Why do you think morale's up then?
You may have misunderstood me. I'd say the morale wasn't really up on the conference. I think I think people like farmland long term, and they're bullish on farmland long term. But as far as raising capital around farmland right now, I'd say it's been a little more of a challenging environment. So at this conference, this is where a lot of the folks, present their thesis around, why farmland and why get in. And that's been a pretty easy thesis to pitch the last 10 years. And now that commodity prices are softer and interest rates are higher, that's been a tougher environment for these folks to raise capital for.
Gotcha. All right. So you all put together this white paper looking at farmland as an asset class here. And I was fascinated when you read it all and kind of unexpected. I didn't think this would be in there, but you see the factor of the Soviet Union and Russia in several ways, right? As you look back over the last 40, 50 years, you go in the 70s, they had a terrible drought there, which was great for us in the States, right? And then in the 80s, when Jimmy Carter was president and they had the Soviet Union attack Afghanistan, kind of a familiar theme, what we're dealing with now. You had the grain embargo, so the 80s were awful for a lot of folks. And then now, of course, it's Russia that's the problem again with the attack on Ukraine. And I'm curious what that theme, how you look at all that.
Yeah, there's a lot there, Dave. I was born in 1981, so a lot of folks talk about the 80s farm crisis, and for me, I was a a baby and a child through a lot of that period, but you hear a lot of the war stories around the 80s farm crisis and some of the things that played into that. And of course, you had an inflationary environment and a higher interest rate environment, and you touched on it, the issues around Russia and Ukraine at the time, and so what do they say? There's no new lessons, just new people learning them. And there is a lot of familiarity around what you saw in the 70s and 80s and the environment we're in today. And, there's a lot of people, I grew up on a farm here in Iowa and my family farms, and you like to think that you can focus on just growing a good crop and marketing your grain and whatnot. But you've got all these geopolitical issues that you've got to pay attention to, trade issues you've got to pay attention to, and the interest rate environment that are beyond your control. And you add weather in there, and it's a tough environment to make business decisions in right now.
And you traced in this what happened in '08 and '09. So we're dealing with the Great Recession then. Stocks are collapsing down probably 50% or whatever it was back then. And folks are looking for other investment opportunities. Was that, in your mind, is that one of the most significant eras to pinpoint about what's happened since?
Yeah, we have been in a really low interest rate environment, and part of the white paper really focuses on the changing cost of capital, and when I got in the real estate business in 2003, farmland wasn't as attractive in that 2003 period as it has become the last 5 or 10 years. And really, when you look back at the factors that were driving that, 2008, you had the financial crisis. Folks were getting hurt in commercial real estate, residential real estate, the stock market, and you could feel it in our business where folks were looking for alternative places to put their capital, places that they felt were a safe haven where you weren't going to lose 50% of the value overnight. And people started to really look at farmland. And we were getting a lot of calls in that 2008, 9, 10 period from the coast, from folks that historically had never liked farmland, had never owned farmland, and now all of a sudden they're wanting to deploy capital into it. And at the time, it's like, okay, well, they're finally catching on to what all of us that own farmland already know. It's a great investment. But in retrospect, as the Federal Reserve lowered interest rates and continued to pump money into the economy, you really had a low cost of capital that made the cap rates, the returns in farmland that historically are lower cash yields, you all of a sudden made farmland look really attractive relative to the cost of capital. And so, over the last 10, 15 years, there's just been enormous amounts of capital flowing into farmland as folks took advantage of low interest rates, free money, and really bought into this thesis around growing demand for food, fuel, and fiber.
So as this is happening, what's been the impact of the growing number of investors getting in, where maybe it used to be outgoing farmer to incoming farmer or expanding farmer sale versus now having the investors providing that additional opportunity? What's the impact of that in your mind?
Yeah, I don't know if it's, and this isn't necessarily a popular notion and whatnot, but I came to the conclusion early on. I've shared before. My brother farms with my dad. They've got a really successful corn and soybean operation south of Des Moines. And when I got in the real estate business, I would get calls from my family. Hey, this farm's coming up for sale. We've been farming it for 40 years. We're not going to buy it. Do you have an investor that would be interested in buying this? And, we were able to put some deals together where, the investor got a deal that wasn't publicly available or marketed, and my parents were able to retain the acres. And, I made a little money for putting the deal together. And, we really started to think about that. And these farm operations, as they've gotten larger and larger and larger, a lot of your capital goes into your farm machinery and your grain setup and your shop and the technology, and it's a capital intensive business. And so it's harder and harder and harder to own all the land that you're going to operate as your farm operations get larger. and then maintain the equipment fleet and the infrastructure to operate that land. And so, I've said before, nobody likes an investor unless it's their own investor and they need one, right? And so I think that outside capital has a place in farmland, and we have an opportunity to interact with a lot of those folks, and they're generally, great stewards and great partners, and want equitable situations with their farmers. And like anything, there's good actors and bad actors. But I think the role that the investor plays in the farmland marketplace is needed, and it's a positive role.
How long has your family's farm been in the family?
Oh gosh, my dad's dad farmed, and the farm where I grew up, they bought during the '80s farm crisis, but their farming operation had been around for a number of years. But I'm not on a century farm or anything like that, Dave.
So, so that, but I guess what I'm getting at is that because of that background, though, it's still multi-generational. So you can see, I would assume, kind of both sides of this, right? You've, for the family farmers who maybe are a little hesitant to understand, what's the role of an outside investor and do I really want this to be involved in what we're doing, versus you then also see the benefits of what can happen with outside investors and providing that access to capital and all of that, right?
Yeah, yeah, I try to think about it pragmatically. And you just look at the demographics of farmland in Iowa, and 60% of the farmland is owned by somebody who doesn't operate it themselves. And so naturally, you're going to have a lot of investors that own those assets, and that trend's going to continue. You look at the land tenure study that Iowa State University does every year, and farmland owners continue to get older, and farm operations get larger and larger. And so this idea that a farmer can own everything that they're gonna operate just isn't practical. Now, in an ideal world, would I like that, and would that be ideal? Absolutely. But it's just not the way that the system's built. And so we try to look for ways to have that capital collaborate with the farm operator.
So when you're talking to folks who are thinking about, and I'm thinking really just those who are not already in as investors, how do you talk to them about a timeline? This isn't a quick flip kind of thing. So how do you counsel them on what their mindset should be for their involvement?
Yeah, we we look at farmland as a generational asset, and the cash yields. That's where a lot of people get hung up, because they look at the price that you're paying for a farm and what your cash rental rate is for your farmer to make money, and your returns are, if you're lucky, around 2-3% cash yield on those types of deals. And you wouldn't buy a farm, and this is the dynamic we're in right now. If you can go get 5% in a CD or a money market account or a T-bill, why would you go take five if or take two if you can get five on the other side, and be highly liquid? And yet, when you look at the long-term history of farmland performance and how it's behaved, in Iowa, we've averaged just shy of a 7% appreciation rate in addition to the cash yield over the last 20 years. So if you're earning 2 to 3% on the cash side of the equation, and your land's appreciating at 7%, that's a 10% total return. And this comes back to that interest rate environment. When folks were borrowing money at 3-4%, that worked really well. And so when we talk to people about getting into farmland, we coach them that these are generational assets. A lot of the farms that we sell at People's Company are century farms, and they only sell once in a generation. And you always try to highlight that, like, this farm hasn't been for sale for 100 years or 80 years. And so the old saying is, the time to buy a farm is when it's for sale. And you have to kind of take your eye off of the economics a little bit and realize that when that piece that comes up that's available, there's a lot of people that have maybe drove by that farm for 50 years, 30 years, 20 years, and I want to own that farm someday. And that's where you see some of these really interesting results when you have farmland auctions, because the generational nature of the asset, and that's a hard thing for outside investors to get their head around. They want to look at it as a financial transaction, and while there's a lot of great financial benefits, that's not really how farmland trades. There's legacy, generational buys, neighbors who buy things to enhance how their farm performs, drains, tear out fence rows, that sort of thing, and I do think that's one of the lessons for the financial investors is, you've got to kind of look past some of those financial metrics and understand what you're getting into.
But it's also so much more than just the property to the family.
Absolutely. I mean, there a lot of these farms where again, my family rents farms that we've been farming my entire life. And, you start to treat them like they're your own and you get attached to them. And, when those trade hands, if you aren't able to retain those acres, it's an emotional thing for these folks.
Are you of the mindset that we will likely not see a lot of farms change hands? And I ask that because as we've talked to folks over the last several weeks in particular, they're explaining the landscape, especially some of these university professors and researchers, in that, of course, you're going to have some distressed properties, situations where folks are upside down for whatever reason. But for the most part, because things had been so solid the last several years, they're not under that kind of pressure. So are you of that same mindset as you look at the rest of this year?
Yeah, in the Midwest in particular, when you look at farmland nationwide, it's leveraged at 13%, so almost no leverage against it. So the interest rate impacts are not as impactful on farmland as, say, commercial real estate or residential real estate. And then we've had a nice run with strong commodity prices for 2 or 3 years, so farmers' balance sheets are in relatively good shape, generally speaking, and so. In farmland markets, if you don't like the price, you just don't sell it, right? There's not forced sales generally, unless there's some sort of divorce or death kind of situation. Most people don't buy farmland to sell it; they buy it for generational wealth and legacy reasons. And so when you have these environments where there's a perception that commodity prices are lower and interest rates are higher, and therefore the land market's softer, people just don't bring their land to the market. Well, that shrinks inventory in a market that already has very limited amounts of inventory. And so when you look at the stats, about 1% of all farmland in the United States hits the public market on an annual basis. And so, when there's no inventory and there's no distress and there's very little debt, and there's a lot of people that want to own it, both farmers and investors, it's really hard for that market to move down. And so, while you look at the numbers and you're like, gosh, farmland markets should soften a little bit, I don't really see it happening. And that's a Midwest perspective. One of the big topics at the Global Egg Conference last week is apples. Apples in the Pacific Northwest are under a lot of stress right now. Almonds, pistachios, walnuts, you've covered that. On the California market, there's a lot of distress there. And so, it depends what crop you're in and what part of the country you're in, but your core Midwest farmland, I think those markets are going to remain pretty stable.
Well, because of that, we're both in Iowa here, so, largely corn, beans, eggs, pork, kind of some of the big staples here. But you just highlighted a couple of the other ones. And because Peoples is all over the place, you're watching production, which varies from state to state. What do you see as the strongest? What's got the most potential out there? You mentioned the struggling ones.
One of the big things that we're watching is how wind, solar, carbon, renewables is going to get priced into the farmland markets. And we've spent a lot of time looking at, Princeton University put out a net zero world paper where by 2050, how do we get to this net zero economy? And we've done quite a bit of research on what is in the Inflation Reduction Act, dollars that are targeted towards renewable aviation fuel and carbon and battery storage and wind and solar, and all of that takes farmland. And I think where maybe in the past you used to look at a transmission line running through your farm and say, well, I don't want to farm around it and it's ugly. Now all of a sudden that might mean that you've got an opportunity for a significant renewable project on your farm. And so that's where I'm just really, really bullish on farmland in general. I just think there's so much optionality. And some of the folks that are doing the fixed income thing and saying, well, I can get a T-bill for 5. And it's like, well, but you're not going to hit, lightning's not going to strike on the T-bill where, somebody knocks on your door and has a really exciting, battery storage project or community solar project. And so, those are some factors that are at work right now that make me bullish. But then, just as far as where the opportunity is, there's a lot of things happening with water in California. The SGMA Sustainable Groundwater Management Act is fallowing a lot of acres in California. And California is one of those markets where it's the only Mediterranean climate in the U.S. where you can grow almonds and pistachios. And so as those acres shrink and trees come out, the trees that are left standing, if you will, are going to be more valuable because you're going to have less available land to grow almonds and pistachios on. And then I look at the Pacific Northwest, and you can tell, Dave, I'm a land guy. I love all land everywhere, but I think the water resources in the Pacific Northwest are largely undervalued, and the optionality in Oregon and Washington, they grow about 100 different crops out there. So cherries, apples, almonds, or not almonds, hops, blueberries, and potatoes and onions. And so for a guy that's used corn and soybeans, when you get into those other fresh market crops and permanent crops, you get really excited about the optionality in those markets.
If I can back you up here, you brought up, you're fascinated by the potential kind of on the energy sector, wind, solar, carbon, battery storage, all that. We've got an upcoming presidential election here. So who knows what the priorities would be come 2025. So how do you talk to folks about that? And I appreciate that some of the investments are already kind of in the works to do this expansion, but there aren't necessarily the guarantees for 2025 and beyond. So how do you counsel folks in planning for that?
Yeah, so we've got an energy management group where we manage both minerals, wind, or oil and gas, and then we manage renewables, so the wind, solar, and carbon side. And what you realize is that you need all the power, no matter how you can get the power, right? You need both the old methods and the new methods. And so some of the political battles here, I chuckle about it because it's going to take all of it, and you need pipelines, and you need oil and gas, and you need wind and solar and carbon and whatnot. And so a lot of the money, as you said, has already been allocated. The trains left the station, and a lot of this money's already been or incentives have been put in private hands to build a lot of these renewable projects. And I don't think fundamentally that's going away. I think that there's going to continue to be an emphasis on biofuels. Like I said, renewable aviation fuel's huge. The carbon pipelines, and I think all those things are great for agriculture. And I don't see a change in the administration really competing against what's already in the works right now. I think both both political parties understand the importance of having energy, and this is where I get bullish on land. It all takes land, no matter how you do it. If you're a believer in wind and solar, that takes land. If you're a believer in biofuels, that takes land. And so I think just being in the land game is where you want to be, is kind of the moral of the story.
You mentioned aviation fuel. Do you think that as a country, that is enough of a priority? I've been reading about how Brazil is trying to play hard in this. Are we competitive enough and fast enough where this is a focus that we can stay ahead of what they're doing?
That's above my pay grade, Dave, but I've read some of probably the same headlines that you've read, and I think the US maybe is behind, and I think we can do more, but I I can't really speak to any specifics beyond just some of the headlines I've read.
One of the things that I know you're into is sustainability, and it's a fine line here with folks, right? You have some folks who want the government to push those kind of things. You have a lot of other folks who want kind of the local decision making with all of that. You've obviously get to see different plans, different strategies all over the country. Do you feel like that is going to be a primary focus of folks, whether they're doing it voluntarily or forced to do it? It just seems like we're almost in a kind of a sea change time where no matter where you are on that spectrum, sustainability is kind of top of mind for a lot of folks. Do you agree?
Yeah, I agree. And again, it's one of those topics that is maybe controversial on the surface, but when you pull back the layers of the onion a little bit and understand the perspectives, I sometimes, get involved with some environmental groups on issues and you talk about nitrates in the water and you'll just ask a simple question like, why do you think a farmer would be motivated to waste nitrates and get nitrates into the streams and rivers? And they kind of look at you with a blank stare. I don't know what the motivation would be. Well, there isn't one, right? Like we're all motivated to have clean river streams, and where you're ineffective at turning nitrogen into a commodity, corn or soy or whatever you're growing, then you're losing money. And so there's not a motivation to be irresponsible around sustainability. And I think folks just misunderstand each other. And I think everybody wants to be sustainable. It's just sometimes how it gets packaged up and the message gets delivered, I think sometimes creates a divide. But, several years ago, I got involved in the Des Moines Waterworks lawsuit against the drainage districts and trying to help develop recommendations for the state legislature around how to solve Iowa's water quality issues. And you just look at Iowa; it's the most fertile, most valuable farmland in the world, and it's got the highest occurring natural nitrogen in the soil of any soil in the country. So when you add drainage tile to it, you naturally have nitrates getting into your streams, rivers, and waterways. And that's not irresponsible. That's just the way that the infrastructure was set up, 100 years ago when we discovered drainage tile. And so I think, today we're all getting more educated about the benefits of cover crops and regenerative farming. And, the consumer is demanding those things. And I think farmers are willing to play ball. And I think the landowner plays a large role in it. A lot of these farmers have 1 year leases on their farm that they're leasing. So go back to my example of 60% of the farms in Iowa are rented. A lot of those leases are 1 year leases. So how can you expect your farmer to be the one that cleans up the environment on your farm that you're renting to them on a 1 year lease? Their primary objective is just to make money farming it that particular year. So I think there's some messaging issues, but I think deep down, landowners want their land to be sustainable. They want that superior appreciation over the long haul. Farmers want to make money farming and be sustainable. And I think environmental groups have good intentions and they want sustainability too. But I just think they sometimes struggle with the communication with each other.
I wanted to kind of close out by maybe looping back to the white paper, and you're into this stuff knee deep every day, but when you get an opportunity to kind of step back and you're looking at longer term trends and things like that, I'm curious, as you're putting all this research together, and obviously Peoples does other research projects every year, but was there something that stands out to you that almost kind of surprised you when you see it in black and white like that?
One of the new projects we're working on, we've got an internal data project where we put together all the RMA actuarial data from crop insurance for the last 50 years, to where you can see some really interesting trends. And so we've started looking at trend line yields for corn in particular. And a lot of your counties in Iowa and Illinois, your big corn producing counties, your trend line yield for corn over the last 50 years has averaged 2 to 3 bushels per acre increase per year over the last 50 years. And so, going back to the farmland returns being low, and appreciation being high, a lot of people look at that, and we all have this intuitive understanding that farmland is a good place to put money, and we all want to own a piece of American farmland. And yet, when you try to wrap your brain around how to buy it, and you're looking at that 2% return, and you're paying your bank 7% for your money, you're like, how's this work?
Mm-hmm.
And when I started looking at that RMA actuarial data, and I could see like real numbers backing it up, that yields are increasing 2 to 3 bushels per acre, and I have this data aggregated down to the county level, and it is really eye opening to see that that this is where the appreciation is coming from. 10 years from now, most farms are probably going to be growing 20 to 30 bushels more per acre than they are today. And you've got all this optionality, like, as I suggested, around renewables and whatnot, that's not yet priced into the land market. And so I think it's a pretty exciting time to be in agriculture and farming. And I think we're just scratching the surface in terms of understanding, the power of how you can harness some of these regenerative practices and these ESG mandates, and this comes back to where the capital's at, but do it in a way where it's profitable and you're adding value and you're doing good things. And so I'm pretty excited about it all.
Steve, we appreciate the time, and you look great.
I appreciate that. Likewise.
I look far better like this. Thanks, Steve.
Thank you.
That's Steve Bruere, president of People's Company. Now, a reminder, sign up for the weekly American Farmland Owner newsletter, where farmland owners get their news. You'll get unique angles on some of the biggest stories impacting the farmland world. Just go to AmericanFarmlandOwner.com, enter your email address, and then you get the latest American Farmland Owner newsletter. As soon as it's published, it goes straight to your inbox. Thanks for joining us. I'm Dave Price.